Hello guys, it's Joe with Bitraged. So I want to jump in here, answer a couple questions that you guys had. You posted in the comments and give you an update for today. Before I do that, I want to preface this by saying a lot of you have been asking where the bottom is, what the death cross is going to do for Bitcoin, and all these questions. We love answering your questions, and that's why we do these videos. We don't get anything out of these videos at the current time. We just do them because we want to help you guys. But I do want to say that I don't want you guys to become dependent on these videos. I don't want it to seem like you can't do this on your own. You can't go to your chart, you can't look at your chart, you can't read a chart on your own. You have to have these videos in order to do that. We want to do these videos as maybe more of a mentorship, where you are learning the concepts, where you're learning the fundamentals and the basics of how to read a chart, how to trade. That's why we do it. But we don't want you guys to use these videos as trading signals or as a crutch to trade off of. We want you guys to actually be able to make these trades yourself, because ultimately the goal is to become a profitable trader, if that's what you want to do. And assuming you're watching this video, that's likely what you want to do. So what I would say is, if you're brand new and you're trying to learn all this and you don't have the confidence to put in your own money, start paper trading. Get started. Start looking at charts. Start making decisions on paper and gain your confidence that way. Once you start to see some success and you're starting to make good paper trades, then you can start putting some money in. But the only way you can learn this is by actually going to a chart, by looking at a chart. When I got started trading, how I learned how to trade and how I learned how to be profitable is I spent hours and hours and hours looking at charts, poring over charts. If I didn't understand something, I went and Googled it. I went and asked a friend. I know people who are great traders. I go ask them. And, that's how you learn. You learn by doing. You're never going to learn by just watching these videos unless you put them into practice, unless you go out and look at charts yourself. So with that out of the way, what's going on in Bitcoin today? One of you guys pointed out a very interesting thing for Bitcoin. You noticed that here we came up to 9,000. And as the price ran up to about 9,100, 9,150, the RSI started to decline, and we started to get a divergence here. What that tells us is this move up in price is unsustainable. It can't be sustained. The market's running out of steam. It's a good indication that this is not where you want to put your money in. And we saw the same thing back here. So we reached overbought. We reached above 70, reached overbought. Price continues up, but we see a divergence here. We see a divergence, price continues up. That's a great indication this market's running out of steam, and this run is running out of steam. And we're going to see it fall off. And all of this consolidation, all of this sideways movement is because the market's running out of steam. Because the run's running out of steam. Because the buyers are running out of steam. That's why it's happening. So that was a really good catch by one of you guys. If you see something like this happen, there's a good chance, there's a good possibility, there's a good probability this run is running out of steam and you're not going to see it continue. So at the current time, we're hanging on support at 8,500 right here, and we're doing absolutely nothing. For several hours here, we've not done a whole lot. We ran up a little bit, fell off a little bit, haven't done a whole lot. It's kind of similar to what we saw here. This is not a market you want to trade. This is not a run you want to trade. You're inside this box here. You don't want to trade it. You want to trade the support. You want to trade the resistance, right? So if you entered a trade here, you would have exited it here. You would have put a stop loss maybe down here, down in here somewhere. You would have took profit here. Never enter a trade in between support and resistance, right? So if we're running back up to support, we're hanging on support, this is not where you want to enter, because the chance of this dropping off is really high. Just given how the market is behaving, how it's reacting, the likelihood is that we'll fall back off and we're going at least to 8,300, where we'll test support again. If we break support there again, we're going all the way to 7,300 once again. Pretty much what we talked about in the last video is still relevant, and we did break out of this reversal zone, and then now we're coming back through it. And it's important to realize when you're looking at reversal zones, you also have to consider what the chart is doing. You know, if you have a reversal zone like this, which is accurate, you know, we've seen it hold on both sides, but also you have a serious resistance level right above that, well, you have to take that into consideration, because we have to break that as well. You can't just break out of the reversal zone and expect everything to be perfect. So one of the other questions we got is, when is the exact time when this death cross is going to happen? Nobody knows that. Nobody can tell you that. The market has to decide that, because every time we go down in price, it changes. Every time we go up in price, that changes. If all of a sudden we took a huge run and went all the way to 12,000, which, by the way, is not likely at all, let's just say that happened, that would change this whole scenario quite a bit. So it has to be determined by the market. Nobody knows exactly when that will happen. The other question we got is, you're using an EMA in the example. You have to use a simple moving average, because an EMA is not the real moving average. A simple moving average is the real moving average. You know, it's kind of like the whole log versus linear scale debate, and what people fail to realize is that they're indicators. One will tell you different things than the other. An EMA will show you recent price movements weighted more heavily than price movements in the past. A simple moving average will show you the entire run weighted exactly the same, so everything is equal. Look at how well this 200-day moving average in red is holding as resistance. It's holding extremely well. This is extremely strong resistance. Now, if we switch this to a regular moving average, I want you to notice what happens. All right, so we get closer here for the two moving averages to meet. We get a lot closer, but also notice how this average is not holding as support anymore. It's not holding as resistance anymore. It's not really doing much in that regard. So what that can tell us is that the EMA is being used heavily by market makers, and that could give us an indication, because an EMA would be used more heavily by traders, and it is. It gives you a more accurate depiction of recent price movements. A regular moving average is good for more longer term, if you're looking more longer term on the chart. If this does cross, let's say it crosses here, let's say it crosses next week, next couple weeks, you know, I don't know. Nobody knows when that actually would happen. Is that going to turn the market into a bearish trend by itself? No, it's not. But if it does happen, based on all of this move here, it's a good indication that this market is going to continue bearish, right? That's the whole point of it. And I think a lot of people are so stuck on the death cross at the expense of everything else. And you have to consider, you know, the rest of the market as well. That should not be your sole indicator. That should not be, you know, what you're fixated on. It is a strong indicator, but you do want to be aware of other factors in the market except that. As far as today's concerned, you know, we're probably looking to come back to 8,300. At this point, it's pretty likely. You know, we could make another run to 9,000. So currently it's a pretty 50-50 market. You know, we're likely to come back to 23.6, 8,300, you know, even further down, and retest, and then maybe come back to 9,000. If we break this support here at 8,300, we're just going to go back to 7,300. What you want to keep in mind about that is we made a pretty serious run here, right? So because we made this run and 7,300 held as support pretty strongly, coming back down, we have the potential of holding 7,300 again for a run up. So you have to be aware of that, and you have to be watching that. If we come back down, hold 7,300 as support, we could continue and bounce off, come back up. or we could break it and see the price levels we've talked about in other videos. But that's where we see the market right now. Not a whole lot has changed. We're still between support and resistance, and the market hasn't done a whole lot in the last couple days. But that's going to do it. If you have a question, you have a comment, you have a suggestion for a video, leave those in the comments. Like the video if you liked it, dislike it if you didn't like it. Really doesn't matter to me. Just do these videos so you guys can get some value, so you guys can learn this market. Thanks for watching, guys. Take care.